Good evening. Ira Epstein of Linn & Associates with your metal market wrap-up for this Monday, and we are now at the 11th of January, 2021. I had to get that out, 2021, wow. And the time, 5:40 p.m. Central Time. So another down day in the metals, and they were pretty violent to the downside. Even the copper market down 10 cents intraday. You're looking at the silver down sharply during the day, very sharply, and then came back, which was interesting. And the gold market sitting here at the 1848 level. Now, this is due to the dollar index. The dollar's getting what I'll call some short covering, new buying, whatever you want to call it, coming in as interest rates continue to climb. So the higher rates go, it gives a little bit of a boost to the dollar right now. I don't think that's going to last over time as the U.S. embarks on a tremendous amount of spending once the Democratic administration gets in. And they're in all spots come January 20th. They have the House, they'll have the Senate, and they have the presidency. So we will see what they come up with. Of course, there will be headwinds to them from the Republican Party, but a lot's going to get spent. That's what the market is counting on. Bitcoin, totally crazy. 42,000 to 32,000, just like that. I mean, wow, what crazy moves. So let's take a look, if we could, at what the chart action does look like. Now, as we look at a weekly chart of gold, you can see the market is staying and has been staying since back here. The end, well, we can call it that October time frame when it got back under the 18-week moving average of closes. And this is a close-only chart, so it's not taking into account the highs, the lows, and all that, just the closing prices, but you can see where it's at. You've got to get back over that 1900 level to get over that number with any real oomph. 1879 is the number. You'd like to get over those previous highs that come right in there. When you look at a daily chart, you've come quickly from the 1960 level to the 1820 level in no time. How many days did that take? 1, 2, 3, 4. Today is the day this is day 5, right? But look at that size of a move that it had. Rather dramatic in its scope. The market took out all the important lows back here, so you end up with a higher high, a lower low. That is not a trend. I define a downtrend, if that's what you want to call this, having lower highs, plural, lower lows, plural. You don't have that. You have the bias down. Battlegrounds likely to turn out to be the 200-day initially as resistance, 200-day moving average of closes. If it can pop through there, then the next resistance, 1886. What about support? Look where the black dashed line is, the lower Bollinger Band. The first time you hit a Bollinger Band, upside or downside, it is where I recommend and talk to my subscribers of my paid research that's where I think the pros take money off the table. You don't have to do it. I'm not asking you to do it. It is one of the things that I teach. So for me to see the market get down there the first time that it hit it, since back here in the just before December? Yeah, I can see the logic there, and that's just what did happen. When you look at momentum, we have an oversold market. So we have an oversold market that's reached down to the lower Bollinger Band, stepped out of a downtrend, and the bias is down. When you look at the gold-silver ratio, you had a whipsaw back to the upside, and that happened a couple of days ago. This was Thursday, January 7th. Here's the 8th. And now you're getting another day in here. That's what you can see. So you're coming into Tuesday, January 12th. You know, on pullbacks, that should be the support. Right now, silver loses to gold temporarily. And if you look at the silver chart, you went from the upper Bollinger Band to the lower band in 4 days. Wow. Market's going to fight a battle unlike the 200-day in the gold. I think it'll be the, right here, the green line, the 100-day moving average in this market with resistance further up at 2617. As I said, the market was a bit of everywhere today, very violent trading. In the copper market, this is a pullback in a market that, as I was explaining to my subscribers, you had this. You had a market that was developing what I'll call a pipe, that sideways action. The market goes up and pushes on the upper band, and gets another day, but it's not a breakout. Why? You don't have 2 days in a row where the market's over the upper Bollinger Band and closes in the top quadrant. The market comes back up, and then you get an outside day to the downside on Friday. Okay, if the market's going to fall back, I'm going to look for the 18-day average of closes. That is what I wrote in my Sunday, I think it was, my Sunday night research. I gave traders a bunch of numbers, and this is what I was looking for. You gave it to me, and now I'm going to look for the market to hang around here. Could it go lower into the 348 level? Sure it could, but I don't think you're getting a collapse in the market. Let's face it. With the COVID vaccines, and now we're hearing deployment, states want more of the vaccine. They're deploying faster. All this going on around the world, do you think it's going to get worse or better for copper? I think better. Demand will come about as we get through with this. We're also seeing that, and I watched today, got up nice and early, and I was watching the heads of Pfizer, BioNTech, combination, and then I was watching, I think, the Moderna president and another one, and they are all saying, from what I'm reading, that their vaccine can be easily changed, and the current version they believe is effective against the South American mutant strain and the one that's been in Germany. So that's very, very important, and as long as they can make these markers and adjust them on the fly, well, it becomes more to me like a flu situation than the pandemic that we're in as we go forward. And I say all that because I think copper realizes that, and copper is going to be in demand. You got all these electric cars coming, you got so much more going on. Copper's going to be in demand. That's one of the things that I continue to look at. But a correction, why not? How many of these markets just went up all of December? In the financial arena, it was all over the place. So to get a break from that, as people take money off the table, why not? Makes sense to me. The platinum's more in a bear trend than anything. It has, for this one, the lower highs and a lower low. That's bearish. The resistance is 1061.50. But anyone that's selling there, if they put a stop over the most recent high, it would have to be near the 1140 level. That's $90 risk. I don't think you're going to get my attention with that. So I look at this as a washout number, and we'll see where the market wants to tighten the chart up from. That's too wild swinging. The palladium keeps respecting the 18-day average of closes. You see that right through here. You see what's going on here, the slow stochastic in a correction mode. We've had the swing line with the lower highs, lower lows, and over the past, 3 sessions, including today, battleground seems to be that 18-day average. Lower support is the green line, the 100-day average of closes. I don't know that there's a lot left on the downside in this, but the market's not signaling that it's ready to start moving back to the upside. As for the dollar index, well, you came from the lower Bollinger Bands, now you went up to the upper one. What do you think? I think the pros did on that rally. If you don't know it, I'm not going to say it. But that's all that I think it is. I think it's a short covering rally. It can go a little bit more. We're not in overbought territory. It's going to take a while for these currencies to figure out which way to go. But after this monster decline, this is the first rally where you've gotten up to any meaningful number. Is it a change of trend? Not according to the weekly chart, but that's another element that we talk about. You know, in the mornings at 5:40 in the morning, I record this video, and now I started my ETF spider videos. I'm trying to get those going. I start recording about 8:40 in the morning. I want them out before 9:20, 9:30. That's my ideal time frame. And as you know, in between then, I'm shooting these videos now for the morning flash. So I've got a new schedule that I've set for myself. I enjoyed it. I got a lot done today because it frees me up after I do that for my whole afternoon, and I can get a lot of work done. Otherwise, it wasn't working out the way I wanted it. Plus, when I went away on vacation, I realized how important these videos are. You know, you got to get away from your norm, and since March I've been housebound. It was great to do that. But if you look for all these markets that I cover, there's something for everybody. And believe me, I'm not bashful when it comes out to say, buy here, sell there, do this, do that. So am I saying something to you here? Yeah. I'm saying that if you're interested in what I have to offer, how I go around offering it, well, this is one of the ways to do that. $7.95, think of it as a cup of coffee, a large one, and that's about it. You get 26 videos for the month. Each one's 20 to 25 minutes long, approximately. And it's all explained on our website. Just go to www.iraepstein.com. Under the word research, everything is laid out there for you. I'm Ira. You have a great day, and I will talk to you all with your updates first thing in the morning. And right after this one, I'll be recording your financial market video. Have a good day.